So, good morning. This is December 10th as I record this video. It is 6:30 in the morning, and this video is dedicated to Mr. Aniruddha Pavade because he sent me this email, pretty long email. So, this could easily become a two-part or a three-part video series. And I plan to do that because if somebody is sending me a detailed email, it deserves attention, it deserves a discussion, and you will learn so much if you go through this video series. So I will break it up into multiple video series parts, which I have done before with my subscriber emails. Let's go through the email. The subject is doubts around fundamental screening of stocks. So basically, if you look at this orange trading system framework for swing and positional traders, these are the 5 different kinds of analysis we do to identify a stock or as a potential trading opportunity. In that, the fundamentals is a very important point, especially if you want to take a positional trade. There are 12 different criteria in fundamental department, and out of 12, we want minimum 7 of the criteria to be in our favor. It can be any one of those 12, not necessarily some specific criteria have to mandatorily be in our favor. So he has a question regarding the fundamental criteria. Let us look at that. Hi Rohit, hello again. I have sent one email to you already with the subject doubt on selecting trades basis market capitalization. Awaiting eagerly for your views on the same. I think I have made a video on this and already published it. Let us see when it is coming, because I publish a video, I create a video, I publish it to YouTube, and I put a scheduled date. So let's see when this is coming. I will have to check on this. Meanwhile, I had 2 other doubts which I am noting below. Number one, main question. Should we avoid stocks with decelerating EPS and or sales as they sit at the heart of William O'Neill and Mark Minervini's trading strategy? So he's talking about a decelerating EPS growth in the latest 3 quarters. One of the criteria that we use is in the latest 3 quarters, the EPS growth rate should be accelerating. Same goes with sales. And this is in line with what William O'Neill and Mark Minervini discuss. I have a slightly different approach because I believe that if the EPS growth rate of a company is decelerating for latest 3 quarters, does not mean that I outright reject the company, because I look at everything from the prism of risk management. I look at everything from the framework of risk management. For example, if there are 2 companies which are fundamentally strong, which means both of them meet 7 out of 12 of our criteria. If there are 2 companies like that, one company has decelerating EPS growth in the latest 3 quarters, another company has accelerating rate of growth of EPS in the latest 3 quarters. Which company do you think carries more risk? Which company do you think carries less risk? Obviously, the company with accelerating EPS growth in the latest 3 quarters would carry less risk. That is my approach. I will not outright reject a stock. I will just know by looking at the EPS numbers whether I am being presented with a high risk or a low risk opportunity. And once I understand that this is a high risk opportunity, then I will manage that risk with 2 things. What are those 2 things? I have discussed it already on my YouTube channel. One is the position sizing. I might go in with a small position size, or if I go with a normal position size, I will keep my stop loss tight. So you see, if I look at everything from the prism of risk management, I don't end up unnecessarily removing a stock which is not supposed to be removed. Because apart from EPS, there are other factors that could be in my favor. This fundamental criteria broadly centers around four pillars. Number one, EPS. Number two, sales. Number three, profit margin. And number four, return on equity. So if EPS is not in my favor completely, then at least the sales, return on equity, and margins could be in my favor. Correct? So I'm looking for that. So I'm giving the stock some chance. I'm giving the stock some opportunity because this is business. In business, nothing goes in a straight line. So you have to accommodate these factors. So the answer to the question is no, you do not avoid stocks. You consider them, but you be careful with position sizing and stop loss placement. Details. Now he's giving an example. Stock name ABDL. The stock is currently in the midst of forming a base as per MarketSmith India. Now I'm going to show you the chart of this stock, which is the reason why I encourage you to read the disclaimer statement in the description of this video. I'm a SEBI-registered research analyst. I don't give investment advice. I encourage you to do your own due diligence. All of my content is for educational purpose only. So we will discuss this now. The stock is currently in the midst of forming a base as per MarketSmith India. The base quality is not good and therefore doesn't qualify the technical barrier so far. So now he's talking about the technicals. You see, all of my subscribers, all of my students, when they speak about a stock, they're eventually referring to this model here. Everything boils down to this simple model that I have created, which is the reason why I encourage you to download, print, and laminate this model and stick it to a wall where you can see it very clearly so that you don't miss out on anything before you make a trading or an investment decision. The group rank is fair and improving. So a lot of things he has discussed in one single statement. It is in the midst of forming a base. That is a technical criteria. The industry group rank, now he's going to comparative. You see how he's switching from fundamental to technical to comparative. And he's seamlessly discussing everything. So he has a very good understanding of this model, what to look for, what not to look for. So I would like to congratulate Mr. Aniruddha Pavade for taking the time for personal growth, for taking the time to upgrade your skill sets. So let's go to MarketSmith. Let's write here ABDL. Allied Blenders and Distilleries. So he's talking about the fair group rank. Now this group rank is fair because it is more than 40. When the group rank is more than 40, you don't outright reject the stock because the group rank is not less than 40. You look for improvement in the industry group rank. So 6 months ago, what was the group rank? Now, what is the group rank? So he's saying that it is improving. That is why he's considering the stock. He has not rejected the stock based on the group rank. This is fantastic. Let's talk about by the way, improving. For those of you who don't know how to look at improving, just go to the name of the industry group rank. This is beverages alcoholic. Open a new tab, go to industry groups, go to beverages alcoholic. You see, industry group rank is 47. 6 months ago, it was 51. So the rank has improved. That is why he has written improving. So Aniruddha doesn't seem to be a beginner now. This is a very sophisticated email. A beginner probably would not understand what he has written here. Probably Aniruddha is enrolled in my video course. I don't know exactly. But even if he is a subscriber and if he has spent a lot of time on the channel, he would come to this kind of professionalism. Okay. This is a very professional, high quality email. The base quality is not good and therefore doesn't qualify the technical barrier so far. So let's go to the base quality. You see, he sent me this email on 6th of December. Now we are 10th of December. So it's the recent base. Why does he say that the base quality is not good? You see, because the stock is, it seems to be declining, going towards the 50-day rather than moving up or going flat. It seems to be falling or drifting down towards the 50-day simple moving average, which is this yellow color line. That is why he says the base quality is not good. Second reason why he might be saying the base quality is not good is it's in the red zone. All of this price action is in the red zone. Let me draw the zones for you. So see, I have made some bookmarks here so that I can quickly navigate to the pages that I want. Let's go to uh, ABDL. ABDL. By the way, when I show you chart or when I show you any trading chart layout, and if you see some lines marked on the chart, that doesn't mean that I've bought the stock or doesn't mean that that does not necessarily mean that I have a position in the stock. So please do your own due diligence. Okay. By mistake, I might have shown you some stocks where some lines are marked. So you might think that I own the stock. That may not necessarily be the case. Sometimes I might be owning the stock. Sometimes I might be studying the stock, things like that. So all of my content is for educational purpose only. Please read my disclaimer. So this is the base. You see, this is a poor quality base. You see 2 points in the base. Most of the price action, latest price action is in the red zone. He sent me the email on 6th of December. 666. Yeah, 5th of December, I think was a Friday. Before these two candles came, that is when he sent me the email. And you can see why he's saying the base quality is poor because the stock is in the red zone. This because this is what he saw. This was the latest candle he saw before he sent me the email. So very good technical analysis. I would argue that if a stock is not technically strong, why are you even bothered about looking at the fundamentals? Because if the fundamentals of the company were good, why is there a technical problem with the stock? So for me, the reason why I have kept technical before fundamental is because if a stock is technically not strong, I'm anyways not going to give weightage to the fundamentals. So this statement is correct. Even in case of fundamentals, it meets 5 of our 12 fundamental criteria as below, and therefore doesn't qualify as a good fundamental stock. So now he's talking about the 12 different fundamental criteria. He has given a picture, so he's probably using an Excel sheet. I personally do not use an Excel sheet. All of this happens in my brain because it is so ingrained in my brain. It is basically it's 4 pillars: EPS, sales, return on equity, and the profit margins. That's it. That's in my brain forever. So I don't need Excel sheet or table, and I don't look for a stock that is meeting our criteria. I look for stocks that are violating the criteria. For example, when I'm looking at a stock, I am not counting how many criteria are in my favor. I am counting how many criteria are not in my favor. So I am looking for violations. If there are 6 violations or more, automatically rejected the stock. If there are only 5 or less violations, that stock is in my in my favor. Okay. So I'm looking for violations because my primary approach is but to look at everything from the prism of risk management. So in the next video, we will look at all of these 12 criteria and why does he say that it meets 5 out of 12 of our fundamental criteria? What criteria is he referring to? We will look at that detailed discussion in the next part of this video. In the first part, I have covered the validity of these statements. The stock selection and his analysis, his assessment of the stock is very good. And I also answered some query that was mentioned here. I will see you in the second part of this video. Thank you so much.